Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we've seen here is 3 days of resistance at the 100-day exponential moving average, basically the 2014 area. We printed a high 2 days ago at 1475, and we pulled back very nicely down to the red line, the 50-day exponential moving average. So the market is doing a very good job of respecting those levels. Now, not surprisingly, the bulls have tried to establish the 50 as support, and they're bouncing it. Remember, last week we had 2 days of 50-day exponential moving average resistance. On the third day, they popped it over. Fourth day, they held it as support, and then we took a trip up to spend those 3 days at the 100. What the bulls want to do is keep this as support, move above yesterday's high, and try to head back up to the 2014 area. If they do that, they put themselves in a decent position to be able to break through. Okay. What's waiting for them after that is the larger issue, which is the 200-day exponential moving average sitting up around 2023. What the bears have an opportunity to do today is to break the 50. Okay. They tried to push it down off of the 8:30 economic data release. They got down into the 92s. Currently, the bulls are trying to bounce it back up, but we've kind of stalled in the in the 96 area. I'm not doing anything right now. I've got a leftover short from the move up to the 100-day that has a runner at 2004 quarter. I've taken a ton of profits on that. It's just a small piece that's left, and I just have an even stop on it. And if you make a deeper move, that'll be great. If I get stopped out, I get stopped out. What the bears want to do is break the 50. The bulls don't want to trade back down into this area. It's taken a lot of time and effort for them to get above it. If they get back below, then we should test the mid band. We should go down to the green line, which currently is 52.35. It'd be a little higher by the time it got there if we made that move. And then we really find out, is this a buy dips market or is it a sell rallies market? As long as we're underneath the purple line, everybody, and we've been below the 200-day exponential moving average longer than we have in 4 years, as long as we're below that line, then what we've got here ultimately on longer term time frames is sell rallies. We saw that up at 14. However, on the shorter term time frames, the dip buyers are still coming in and making their money. They bought a big time dip 2 days ago and ripped it up to 14. They bought a dip yesterday, and they're currently, buyers of the 50-day exponential moving average. The bears need to break that dynamic. If we head down to the mid band, then we get the ultimate test. Does the mid band want to hold? Does the ES want to be something that trades between the mid band and the upper band, which on a day trading basis means buy dips? Or is it going to break the green line and join on the shorter term time frames what it already is on longer term time frames, which is sell rallies? So today's a big day. We're going to see what is left to be seen, and we're going to see what this market really wants to do in the next few days. So you want to be watching the 50-day. You want to watch 14 on the upside. You want to watch yesterday's high and see what either side can accomplish. So should be an interesting day. All right. Everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.